right, guys, welcome to another Cryptonerds AMA. We are financial. Nothing said on here is financial advice. We are just trying to provide information on this new project so you can make a decision if it's something that you want to go ahead and look at more, or maybe it's not for you, but we're here just for information purposes only. We're here with Core, who is part of their team. Scotty, my main man here, he does AMAs. Let's get started. So, Core, do you want to introduce yourself, who you are, and what you do for Lava Financial?
Yeah, I'm Core, but my real name is Ari. I am from Chicago, and I have been a developer for the past, 7 or 8 years. Um, been into crypto and DeFi more generally for the past 3 or 4 years. Um, I am the main developer behind Lava Financial, and I have experience working uh, in DeFi and in the NFT space. I have a couple of projects that I've worked on over the past 6 or 7 months. Um, but this is the one.
Anything you can share with us?
Yeah, I mean, so one of the projects is Terraria, which is a play to earn game where users assume the role of dragonkins. And basically they can form clans with other dragonkins, which are it's dragons in the game, and they can go on collective missions. And those clans actually act as DAOs within the game, and they can go on collective missions together and earn Tria, which is an in-game currency for completing tasks, and missions with other players. And they can also fight with other. They can also fight individually, like player versus player. But they can also battle against other clans, or is really it's raiding other clans. And yeah, that so right now that's something that I'm still working on. Um, but it what's interesting is that it's the only play to earn game that I know of where where the where within the game itself multiple DAOs can operate independently. So it's cool because there's a high degree of player autonomy there, and then users can also uh, breed dragonkins um, with other players, and those are determined by the heritable traits that each player's dragonkin actually has.
Cool, man. Have you worked on anything else that maybe we know about?
Um, I worked. There was another NFT project that I was working on it, but it's not so big. It's called Bodies. It's on Phantom, where I pretty much I like puzzles, and I like creating creating things that engage people to a high degree, and encourage people to get involved. So um I created a little backstory with a mystery behind Bodies, and I dispersed throughout social media, mainly on Twitter and throughout the Discord, that people had to solve in order to actually, um, find the origin of the bodies and their creator. So it's kind of like a role playing NFT experiment type thing, and that was pretty cool. Um,
Cool.
the
So you
uh,
got
the
some
other thing,
experience.
yeah, and then we also did something similar for one of our giveaways for Lava, where we had an online scavenger hunt where I put one AVAX inside a wallet, and then I scattered clues on Twitter, Telegram, and our Discord, where if people solved the clues correctly, they would be able to get um 11 out of the 12 seed words for the mnemonic for that particular wallet, and they would just DM me, and I would give them the final word. And one of our members actually solved it. Like it took a couple of hours, but it was pretty cool. And then he actually, I think it was J3, and he actually posted it. He posted his thought process on Twitter. Basically, in order to actually solve it, you would have to go. The first clue was provided on Twitter, and that led to our Discord channel, where we had a channel named question mark, or there's really two question marks.
Mm-hmm.
which had a QR code. The QR code led to our Telegram, and in our Telegram, there were a series of images. Another clue was provided that led people to those images, um, uh, that led people to those images and provided them with what they needed to order them in a specific way. And basically, what people thought at first was that each of the images the name of each image represented, or whatever was in the image represented the key, but really the keys were inside the images. Using stenography, I actually embedded the word of the
Mm-hmm.
11 words. So uh, if you were able to if you're able to extract the image using if you're able to extract that word using the pixels in the image, then and order them in the correct way, you would have found the 11 words. And one person did, and it's on Twitter, so you can follow all the steps that he took in order to do that. But it was pretty
Cool.
cool.
All right, right on. And then so besides you, what else is the team made up of? How many developers, how many people are involved in the project? Shed some light on that for us, please.
Yeah, so there's one other developer. Um, there is who's working on the back end with me. There's a front end developer, and there's one person who is actually a friend of mine who's working on the marketing for us. His name is Yoni. Um, he's listed on our site
All right.
in the member section.
Okay, cool, cool. And then let's get in. So is anybody on the team KYC'd? Do you guys have plans to do KYC or an audit on the project?
Yeah, so we've completed the audit and KYC both with CoinScope. Um, Me and Yoni both have KYC'd with them. Like we gave them all of our information, our IDs. We talked to them on the phone, and yeah, and then we also did the audit with them.
All right, man, that's good to know. And is this information public knowledge? Like, is it shared in your Discord so people can go check it if they want to?
Absolutely, yeah. It's linked in our Discord. It's
Okay,
also pinned on Twitter at the moment.
and we'll include the link for the YouTube video for people watching. It'll be in the description so you guys can check that out. Let's talk a little bit about the project. So you guys are building a hybrid model, NAS, nodes as a service, and DAS DeFi as a service hybrid, right?
Correct.
All right. And why did you guys decide to make a hybrid?
So the primary reason we decided to make a hybrid is um, because I realized that the sustainability of current node models, but more generally staking models, isn't isn't really that great. Because for the most part now, platforms are rewarding users for either staking or for creating nodes in the native token of that particular protocol. And what that means is that the only way that people can take profit is by selling that native token, which ultimately puts pressure on the price of the token, and can drag down the project. And I felt that if you're looking for long-term sustainability, there isn't necessarily a guarantee that projects like that are going to be around, especially if the only utility of the token is that you just get more of it by having some initial amount already, or by staking or creating a node with some initial amount. So I thought a better solution would be to actually provide users with the ability to actually share in the um, returns of the investments made by the treasury. Um, and that's why, and I was thinking about the best way to actually distribute those rewards. I realized that if you had some sort of tokenized index that represented the different components of treasury investments and created a mechanism where users can actually redeem them, um, there would be a lot less selling pressure on the native token. And the purpose of the native token would be more for governance, which is what I think originally most tokens were meant for. Like, I don't think the actual protocol token should be a speculative asset, but should be more something that's used for governance decision making when it comes to the actual platform. So NLAVA, if I don't know how familiar everyone is, NLAVA is basically a redeemable tokenized index of the returns of all the treasuries of the investments of the treasury, and it's weighted based on the actual investment amounts and the amount that you and I gave a really simplified example. I don't know if everyone saw it. It was posted on Twitter before. So let's say that a treasury has a fixed initial dollar value that doesn't change, right? We can call it $1 million. If all assets in the treasury are invested equally in 3 protocols, X, Y, and Z, and the APY for, let's say, X is 5%, the APY for Y is 10%, and the APY for protocol Z is 20%. Let's say that the amount invested is the same for all 3. Since the amount invested is the same, the weight would be the same. So roughly 33%. Now let's say that you have a reward distribution mechanism where you want to distribute these actual index tokens to holders. Let's say that there are a total of 1,000 lava in existence right now that have been rewarded so far. If a user has 1 lava, that's N lava, he'd be able to redeem it for 1,000th of 5% of the amount of the first protocol. And I can give you guys the written description of this afterwards, so it'll be more clear and you can read through it.
Okay.
Be one for protocol Y from the proportion N lava that he has, it would be 1,000th times the amount times the APY of the second one, and it would be the same for the third one. That's just a simplified example though, but it can get more complicated given that different investments usually have different weights depending on their total share among all investments. And also the fact that treasury investments are constantly changing. So the actual weights and breakdown and constituents of the index are changing as well. But that's just a basic example, and that would give people the opportunity to make profits without putting any negative pressure on the native token. And the cool thing about this approach is that because it uses an index, people will have the opportunity to to have exposure to multiple protocols and not just a single token. So it's in some ways it's like one of the, I guess, most it's a very it's almost like the purest way of getting passive exposure to DeFi. I know when people talk about passive exposure, what usually comes to mind is projects like Time, or like projects like Time Wonderland or Olympus. But that's giving you exposure to those protocols. It's not giving you exposure to DeFi more broadly. And because of that, your risk is really concentrated, or your risk is really concentrated on the success or failure of those specific projects. But yeah, we feel that doing it this way would be a lot better for sustainability and could potentially offer very over the long run could offer potentially outsized returns, and specifically when it comes to investments in private projects. I've actually been in talks with a seed fund called 6K. They reached out to me. They were interested in the project, and originally they were looking to invest as an angel investor in the project. But I told them that we aren't planning on doing that now because it would change our current token distribution and structure that we have in place for our pre-sale and public sale. But I did have a really smart idea, given that he has deal flow coming his way because he's investing in so many projects. I thought maybe we could work something out where we have either a joint venture or partner with 6K in order to deploy our capital from the treasury to invest in these private projects, and then we'd receive the tokens that for these, upcoming projects. And then on Lava, we would then distribute P tokens, which would represent IOUs for the public projects, but before they launched, that would be a component of the actual index on Lava. And basically these P tokens would have the same vesting schedule that all other private investors have to follow. And once the vesting begins, and once these projects actually go public, people would then be able to redeem these P tokens on our platform for the actual tokens that they represent. That's just for the private project. But yeah.
All right, it sounds pretty complicated what you're doing there. Let's back up a little bit to the project itself. Where did you guys come up with the code for the project? Is this custom code? Have you guys forked it from somewhere? Walk us through how the code of the project was put together.
So the actual bonding and staking mechanisms are taken largely from the Olympus code base. For the actual node creation and node reward distribution mechanisms, because of what we're trying to do with Nlava, and because of how complicated it is, it was hard to. Originally, we were going to fork existing node projects, specifically LVT, but it wouldn't work with what we were trying to do. So right now we're just in the process of actually building up our node contracts from scratch, and because our node contracts have to function perfectly with our Nlava distribution contracts as well as our redemption contracts.
So I know that you guys are trying to launch before the end of the month. It sounds like you're still working on the code though. So is that going to be completed before launch, obviously, or how's that going to work?
We're gonna try to have it completed before launch, but as I've mentioned in the group, the date, all dates are tentative, and I wouldn't want to launch with a project that's only half complete, and that's also why I have been bootstrapping the project so far with my own money, both for the audit and the KYC, and marketing so far. We're only going to launch, and we're only going to actually conduct the sale once everything is working perfectly and we can deliver on our vision.
Sounds good, man. Well, if you have to push it back, you have to push it back. I understand that. Do you guys have plans for? I think I read in your Medium article that you guys are planning to do a multi-sig. Can you walk us through the plans for that and who's going to be on that?
Yeah. So for the multi-sig, we were planning on using a 3-key Gnosis vault for liquidity and our treasury and our actual distribution contracts. And that was going to be made up by myself and Chris, who is one of the mods in Lava and also the head of Crowd DAO. But then the third signer was going to be a member of the public chosen by the community, but we thought that it would be better to have at least another outside member as a signer, just for I guess for better transparency overall.
Yeah. Yep.
So I think right now we're leaning towards a 5-key Gnosis structure where we have ideally two or three outside members and 2 mods.
Okay, I guess that kind of solves that. I know my friend Scott here, my co-host, has some questions. I'll let Scotty go right now. Go for it, Scotty.
Hey, can you guys hear me all right?
We can hear you fine, brother.
Awesome. Hey, talk to us about your launch day. Can
Scott?
you tell us about like when it is, like how it's going to go,
Hello?
all that kind of stuff?
Core, are you there, my friend?
Yeah, I'm here. Can you hear
Oh,
me?
did you hear Scott?
No, I didn't. I don't hear him at all.
Oh, Scott, he can't hear you, Scott. You have to reconnect. He asked you about the launch date. And you guys are trying to plan to launch towards the end of the month, right? And how that's gonna go.
Yeah, so that's the plan. If we can get all components, if we can get all as if we can get all parts of their app working as intended,
Mm-hmm.
with thorough testing by that time, then the launch will take place between January 29th and February 3rd. But again, that date is tentative because we're trying to be as diligent as possible, and not we wouldn't want to release something if there's any potential concern
Sure.
in any of the contracts, security wise, and also just feature wise, because
Scott,
we're
you want to try it again and see if he can hear you, Scott? And if not, I'll just take over fully. Scott,
Can you hear me?
Core, can you hear
yeah, I
him?
could hear you now. I could hear you now.
Okay,
Go ahead.
perfect. Go for it,
Okay.
Scott.
All right. So what kind of, if any, what kind of mechanisms do you have set in place for like anti-whale or bots or anything like that?
Um, so for anti-whale mechanisms, starting with our pre-sale, uh we have a cap on the actual contribution. Right now it's 2,000 lava. Um, the total maximum possible supply of lava will be around 10 million, and it'll take 200 to create a node. So at most, there will only ever be 50,000 nodes. For the actual, uh, for when it comes to anti-whale features for our public launch, um, we'll be we'll have a buying limit that resets on a rolling basis. So the initial limit will probably be similar to the pre-sale max cap of 2,000, and if someone sells, then that will basically reset again. But if they've held that amount, then after a certain period of time, most likely 24 to 48 hours, they'll be able to buy uh, an equivalent up to an equivalent of amount, or up to 2,000, which is like the first um, buying tier basically. And for staking, I don't you didn't I know you didn't ask this, but people have been wondering, um, what what's the with staking, how does that work? Can someone just sell at any time? And for that, looking to have we're looking to have a progressive warm up slash lockup period where basically if the user owns at least one node, then they're able to sell within 24 hours of the public sale. But if they don't, then um, there will be we're looking at a 5 day lockup period where their tokens vest linearly at 20% per day for that first year, and then if they sell, then it would then reset.
Gotcha. So you have to hold, or you have to have at least one node before you can sell any kind of tokens for like any type of flipping or anything like that.
But you No, you can still sell if you don't own a node. It's just that there's a vesting period.
Right. Okay. Okay, cool. What I saw going through that write-up you guys sent us. You guys are looking at external sources of revenue, like such as validator nodes. Um,
Yeah.
what type of ROI are you guys going to see against those, and what kind of benefit will that be for the community having those nodes?
So the ROI really depends on the um, which validator nodes we ultimately end up going with, whether it's, Phantom, Polygon, or AVAX. But I think for AVAX, the APY is around 11 or 12%. Um, so for for that node, you'd be able to expect, return for the actual index for the component of, let's say, AVAX, for example, in that index, you'd be able to expect a return of 12% for that specific investment. And it also, and if it was, let's say, um, we purchase validators in DOT, which I think has like a 20% return. It would be 20% for that specific component. And then we're also looking at sound stablecoin yield strategies. So that includes things like Anchor and Abracadabra that would also, so the return of those stables would make up another component or another constituent in the index. And then the other investments would be the private investments that I mentioned earlier.
Nice. Okay, cool. That was going to be my next question of what other outside sources of revenue you guys were going to consider. So,
But yeah,
what?
like I said, we're looking at the partnership with the seed fund that I mentioned before with 6K,
Yeah.
because they have the deal flow, and we would essentially be partnering with them, providing them with capital, and given that they have the deal flow and that they have an experienced team of people in the space going through and vetting the projects, whichever projects we're interested in, we would be able to essentially, deploy funds from the treasury in order to invest in those private projects. And then, as I mentioned before, the way distribution would work is there would be P tokens that represent IOUs that would be claimable and would vest following the same period that all other private investors have to follow. And those P tokens would then be redeemable once the project is actually public. You'd be able to redeem those P tokens for the actual underlying.
Gotcha. Okay. All right. Yeah, I think that makes sense. I don't know. I don't think you mentioned it yet, but for everyone listening and everyone that's going to listen, can you tell us what network you guys are launching on?
Yeah, we're launching on Avalanche or AVAX.
Okay.
Yeah,
Alrighty.
Avalanche.
The one other question that I had before I'll turn it back over to Rob or open it up to the community, is where with all of the different nodes out there currently and some other hybrid models that are coming into fruition right now, where do you guys see your guys self fitting into that space particularly?
What I'm not sure I understand what you're asking. Could you be more
So
specific?
yeah. So like with say like Thor and Power and different things like that, like how do you guys see those guys as a competitor, or do you guys have your own little niche that you're gonna be
No.
able to run with?
Yeah, we don't view them as competitors because we're not. Our reward distribution model is completely different. We're
Yeah.
rewarding in the actual investments from the treasury, so you can think of it as more as like um, a decentralized private fund of sorts. You can call it a hedge fund, because people are actually being rewarded with the actual underlying assets held by the treasury. We're not
Gotcha.
distributing a native token because ultimately I'm not sure how long that model will be sustainable for.
Right.
Especially when you take into account dilution and the fact that there's not really much utility with many of these platforms. Like I know a lot of them want to bring NFTs, into the fold, so to speak, but I'm not even sure where NFTs really fit within um within these node type projects, because
Yeah.
and also the issue. So I know there was an idea that we are considering it, and people have asked us about this before. Transferable nodes, right? Where if we tokenize the nodes as NFTs so that people can transfer them and sell them, they'd still be eligible to receive the end level rewards that they've been receiving. but they would just now be transferable and sellable. I'm open to that idea, and it sounds good, except I wonder where the market for that sort of thing really is, because it would only make sense if all nodes have been created and no more nodes can be made past a certain point. And even then, how do you value how would you value, my question is, how would you value the actual nodes that are now fungible? Would you be looking at it in terms of the actual tokens that were made to create the node initially, multiply by whatever the current market price of that token is? I'm not really sure, and it's definitely an interesting idea. I'm just not sure if there's a market for it right now.
Right.
Let me ask you this, Core. So you guys are stopping at 50,000 nodes. How? So I assume that you're most like most Astronaut projects, that when you create a node, it takes part 10 tokens. Some goes into the treasury, some go in the marketing wallet. At 50,000, how do you guys keep the project going? I mean, how are you guys bringing in value at that point? Once you max out, what happens to the project?
So it'll be 50,000 nodes, um, for if for the nodes that are being created with lava alone. But something we considered is that lava isn't the only way to create a node. You can also bond a node essentially using a liquidity pair or individual tokens, which is what would allow lava to to own its own treasury, and that would be at a discount to what it costs to make a node with lava. So something that we considered is either leaving it capped and only making it so that lava can so that once those 50,000 nodes are created with either LP tokens or with lava, and that's finalized. But it is possible to allow for node creation using other assets, which would then go into the treasury via bonding once the entire supply of lava has been uh, taken out of circulation.
What is the entire supply of lava?
10 million.
10 million tokens. Okay. And I did see in the white paper that you guys were thinking of like investing in DAOs like Ohm and stuff like that. Is that's still the case with DAOs being just completely obliterated in the last 6 weeks, or are you guys kind of moving that focus away from that?
That's a great question. So right now we are a little more cautious to we are a little more wary when it comes to investing in DAOs and newer protocols. We're leaning more towards established players, and more towards L1s and private projects right now. But we're still open to the idea. We would just have to do a lot more research
No,
beforehand,
I got you.
into the actual sustainability of these projects,
I
because a
got
lot of these projects, like a lot of them have have huge visions and big ambitions, but that doesn't really matter if they can't really follow through on them in a reasonable period of time, because after a certain point people just won't be interested and they'll leave your ecosystem. So we're really we're looking, if we do invest in DAOs and protocols like Olympus, we would really have to do a lot more research into the actual sustainability models that they have in place. But yeah, like I said, we're always open to the idea.
Awesome, man. Well, here, why don't we do this? Why don't we open it up to the community? I'm sure the community has some questions. I know Godson FTW has been up here for the last 30 minutes wanting to ask you a question really badly, so I'm going to bring him up. And then if anybody else in the audience wants to raise their hand, we'll bring you up too. Let's get all your questions answered that we can, and we'll go from there. God's on FTW. What you got for Core here?
Hey there. Can you guys hear me okay?
We can hear you, brother.
All right. So maybe this is just two questions, a little bit different questions, not really targeted towards the lava, but maybe this ties into it. I'm curious for new people that are following Cryptonaires. Um, do we follow your Discord or your Twitter? Because a lot of the projects that you've been covering, I'm actually finding myself. So it's like, oh man, we're looking at similar stuff. So do I follow your Twitter or your Discord? And it seems like your Discord doesn't really have much in it. So I'm just curious on that. And the second question would be for anyone. Uh, could you tell us how could many investors have avoided things like the ring collapse? I know this is a little off topic, but just, you know, I saw even you and a lot of YouTubers get into this, but the KYC is a really, big issue, and I'm glad that Lava is doing the KYC.
Yeah.
Um,
So
but is there any other metrics or red flags we could look at so investors have confidence in like this project?
I can answer the second question. I'll leave the first one to Scott and Sensei. But for the second question, I personally only really invest in I I I only invest heavily in projects with radical transparency where the actual devs are publicly doxxed. I know it's not in the spirit of DeFi, blah blah blah, but I'm only willing to put large amounts of money on projects where the face of the devs is actually public. If they're not willing to put their face behind the project, then I'm personally not comfortable uh, with the potential risks involved. And KYC, doing a private KYC is great, but I think being radically transparent is even more important. When it comes to actually um, when you actually look at the potential risks involved with a lot of these projects. And I know that with Ring, I don't think the devs were not doxxed at all, as far as I'm aware. I don't really know much much about them, but I know that there was almost like a syndicate or networks of projects they were involved that were also shady. Like I think there was like some metaverse project that they were involved in, and it was a lot of the same developers.
Meta
But yeah,
Island.
generally, I would say it involves like a large amount of due diligence and really knowing what other projects the developers have worked on, what their experience is, and yeah, their overall level of transparency.
Yeah, and I'm saying that because like I just saw 2 days ago, I don't know if you guys have seen this as well, but there was a Solana NFT project that rug pulled investors of 1.3 million despite civic verification. It's called Big Daddy Ape Club, and they
Yeah,
were doxxed.
yeah, that's the problem. That's the problem. Even with audits, a lot of these, it's it's very hard to actually catch everything. Um, and like even with like the rug doc, I think like there are like I can't think of all of them off the top of my head, but I know that there were several projects that still managed to run away with investors' money, despite going through certain measures that would, indicate that a project is safe. Um, you said for that project you just mentioned, they were publicly doxxed?
So I could just I have the newspaper here. It says Solana NFT project rug pulls investors for 1.3 million despite civic verification. So I'm not too sure about civic, but it says that they're going after the people. I have no idea, but it's called Big Daddy Ape Club. So I mean, just being fully doxxed like that and going through a verified, process still doesn't protect people.
Yeah, we need to understand that doxing and audits really don't mean too much nowadays. Getting doxed and getting audits is great, but really it comes down to who's behind the project, what they're building, and really what their goals are, right? And so we
Yeah.
do as a community of crypto investors, we have to do our own due diligence in diving harder and deeper into those projects to really find out who the people are behind them and what are their goals, right? And so that's why we spend a lot of time here on security and things like that at Cryptonaires. We have a security team, we have an audit team, and we do most of that due diligence ourselves. We can't always be everywhere at the same time, but it's rough out here right now, and that's why It's good to have these conversations. It's good to have these AMAs. It's good to have information come out. But at the end of the day, it is the Wild West out here, and it's always good to protect yourself.
Yeah, and just to reiterate the point that Crypto made, what you really would like to know is what their track record is as a developer. What other projects have they worked on? How have they turned out? And what's their competence and experience level overall? Because that's really one of the big heuristics that determines whether or not a project is going to be successful. But yeah, like I said, for me personally, I like to see developers that are publicly doxxed. Like I know, like Daniel Sesta, I love that. I love the fact that he's so out there, and that he's completely transparent. With everything with his projects. He was one of the way that he manages himself and his project is one of the things that actually inspired me to publicly come out with my name and all my information, because I feel like it just gives investors a lot more confident, and it shows that you're not necessarily trying to obscure you're not trying to obscure your work or necessarily hide anything, and you can also highlight the experience that you have in the space. So.
Right on. And then I think God's his first question, he was asking, like, if he wanted to follow the project, is it best to follow you guys on Telegram or your Discord? I think he made a comment that the Discord really isn't built out too much. Are you guys planning on building it out some more, adding some mods there? What's it looking like for the community?
Well, that was directed towards you, Crypto
Oh.
Nares, following you guys. And I'm like, oh, what projects are you getting into? But I didn't see too much on your Discord. Do I follow your Twitter or what's going on? Is that a paid?
Are you a paid member? Are you a paid member?
No, I'm not.
That's why you don't see anything, my friend. Hey, send me a DM. We'll talk after this. It's really not the right place to do that, but we'd love to have you as a member. And we do have a 30-person staff that works on the Cryptonaires Discord to provide information. But just DM me and we'll talk more about that, Gods. I appreciate you coming up and asking your question. Okay, my friend?
Can I get one more in before I go?
Of course you can. I'm not going to deny you. What you got?
Yeah, for Lava Finance.
Yes,
with
sir.
your launch, what type of launch are you going to have? Are you going to do like perhaps a Dutch auction where the price decreases so you avoid any like congestion in the network, or is it going to be at a certain price that you guys are going to launch at?
So you're asking for Dutch auction like what Bancor does with their liquidity bootstrapping protocol, where it starts at a high price and goes lower. So I thought about that, but I don't necessarily think that's what we'll end up doing. So right now we're doing the pre-sale, which is a guaranteed allocation at a fixed rate, and then something that we're heavily considering right now is to have a public sale at the rate quoted, where people will be guaranteed the public rate, or up to a certain limit, just to avoid the sort of volatility that you tend to see with with public launches. So kind of like a public ILO almost for the public launch.
Okay. Yeah. Thank you very much for that. Hopefully you have a successful launch, and thank you again.
Appreciate that. Thank you for the question.
Thank you, my friend. I appreciate you. What you got for Core here? You got a good question?
I think so anyway. My question is in regards to you had mentioned earlier about a NFT scavenger hunt that y'all had hosted, and I was just wondering if there were any alternative ideas to how that could happen aside from being a member of multiple platforms. Users like myself, I have Discord, Signal, Redwood, a few different ones, but I'm not a member of Twitter or Telegram. So I'm just wondering if there was any other ideas in regards to running a scavenger hunt that wouldn't require somebody to sign up to all these different platforms.
So that's actually a good point. That's not something that I considered at the time. Although I will say that for this particular scavenger hunt, if you were on Discord, you would have seen the mysterious channel pop up with the QR code, which would have led you to Telegram. But if you weren't a member of the group and you weren't on Twitter, then you would not have seen the initial clues. So I guess that's something I would have to take into consideration when designing, future puzzles or scavenger hunt type activities. Because I really, to be honest, I didn't consider the fact that not everyone is on most of these platforms. I was just basing it off of, what platforms I tend to be on, and that I know a lot of the members were already on. But that's a fair question, and I would think about ways in the future to increase accessibility to those sort of activities.
Awesome. Thanks a lot.
Yeah, absolutely.
Hey, Cora, I wanted to come back to something that you said about NFTs. Can you, I mean, you said they're kind of really not for the space. I can't remember your exact words, but I mean, there's a lot of these projects that are having NFTs and are being very successful. Why are you against them?
I'm not really sure where the utility of NFTs comes in. Like, I know some of them are using NFTs to boost the rewards, but for us, for our tiers, it's just based on the actual amount of lava used to create the node, which is what determines the tiers. To me, I don't really see where the need for an NFT comes in. The only way I could see an NFT, being used on a platform is to allow nodes to be transferable.
There you
But
go.
even then, there's still the question of, okay, am I going to treat this as any other NFT and sell this on a marketplace? Because the only time the only time nodes will ever need to be transferable is when all nodes have been fully created, and it isn't possible to create a new node, right? Otherwise, you would just make it on the platform itself with, using the tokens needed to create a node. And the problem is a lot of these, not all of them, but I believe a lot of the node platforms have an inflationary model. Some of them have a cap on the actual amount of tokens issued. But in the case where the supply isn't fixed, then there would never be a need to, tokenize these nodes as NFTs and make them transferable, because anyone could just create a node. Anyone could still create a node on the platform.
Well, I just think you shouldn't dismiss it, right? Because you might have to adjust in the future, and just totally Xing out NFTs might not be the best play. You always want to be open and innovating.
So one thing that we thought of where it would make sense to have NFTs is to make our protocol composable and interoperable with other protocols, where you can basically leverage the nodes and use them either as collateral or to actually deposit them, in vaults, for instance, to actually compound your rewards that you're earning. That would make sense to me if you want to make them interoperable, but when it comes to like transferability and sellability, that really only makes sense where if the supply of nodes is fixed and all nodes have already been created. You know what I mean?
Well, isn't that what you guys are doing? Aren't you guys have a fixed supply of 50,000 nodes?
Yeah, that is correct, and that's why we're considering it.
Oh, okay. That's good, man. I thought you were totally against it.
No. My point was that there are platforms that are, creating NFTs or sometimes trying to tokenize their nodes as NFTs, where it doesn't really make sense with the tokenomics that they have in place.
Sure.
At least from my perspective.
In some projects, I would agree with that. Some others that, NFTs are very valuable to the project itself. So anyways, we'll do this. If anyone has any more questions, please raise your hand. We'll bring you up. And I did want to get back to, we didn't talk about how much is a node going to cost. Is that 10 tokens? Is that 100 tokens? Or is there multiple levels of tokens? Walk us through what it's going to cost us and what do we get in return?
Absolutely. So to create a node, for the first tier will be 200 tokens, so 200 lava. And from the pre-sale, given the allocation limits, the cap of 2,000 tokens, 10 nodes will be able to be created if people decide to create nodes with all their funds. But they can either, at the pre-sale, they'll either be able to create nodes, either stake their tokens in the community pool, or just wait for their tokens to vest. But with when it comes to node creation, what we're doing is make it so that there are different tiers with different requirements in order to create the node and different reward rates depending on the tier.
All right, I appreciate that. Jive 007, what do you have for Core? Please ask your question, my friend.
Hey, Core, good evening. Core, my question to you is, you guys seem to be more from a development background, and I don't see anyone who is either into statistics or a business guy from your team. So how did you decide, or how did you come up with the viability of the number of tokenomics? How did you decide saying that you'll be profitable and the community will be profitable in terms of the number of tokens that you have decided, or the number of tokens that you're going to burn? How is it going to work?
Your question, I just want to make sure I understand your question. Your question is, why do we decide on that, on the specific supply of tokens that we did?
Yeah, so see, my question is, I don't see any one of you from the current team with a background of business or statistics. Now, having said that, how did you decide over the tokenomics and the supply, the number of tokens that you have decided? And can you give me a little bit of reasoning saying that at what point in time do you see your community along with Lava Financial is going to be profitable?
So we decided on that. Well, we decided from the get-go that we wanted to limit the total possible number of nodes that could be created. We were looking at Strong and a couple of other platforms. We noticed Strong had around 500,000 nodes, I believe it was, but
500,000 tokens. It's just about 528,000 and some change. They burned 95% of their supply in December 25th of 2020.
Right. And how many nodes does Strong have again?
I think they're passing 250,000.
250,000 because it's 10 per node. Yeah, we were looking at, what some of the other platforms were doing, but then we also had taken into consideration that our reward distribution model is a lot different. We're not constantly issuing Lava as a reward, but instead nLava, which is the index token. So the total number of nodes would ultimately have to be capped, and we thought that 50,000 was just a reasonable number, because it still provides the opportunity for many people to actually purchase the nodes, but it doesn't create an excessive number of nodes.
So really quickly, just to be clear, you guys have not brought any kind of economist or math or somebody that ran the numbers, figured that, hey, this will work with this amount of numbers. You guys kind of just looked out and decided that this is a number that would work. Is that what I'm understanding?
Correct.
Got it. Jive, does that answer your question?
Yeah, but Core, by looking at the statistics, okay, probably
By the way,
around.
By the way, if you any concerns that you have or any questions, and with your analysis, if you don't mind, if you wouldn't mind, could you write it out? Just put it in writing and then post it in the general chat or in the suggestions channel for our server so that we can address it fully, because I don't want you to think that we're putting you on the back burner. Yeah, go ahead.
Oh, no. So Core, two things. Yes, I did reach out to you personally. You could see my DM, and I did reach out to you in the chat as well in Discord. But yeah, I know, I can understand that you guys are a thin, lean team at this point in time, and trying to handle so many people with so many questions is difficult. But I'm sure I'm expecting a response from you. Okay. Now, having said that, okay, looking at your tokenomics.
Yeah. Go ahead.
Sorry, go ahead.
I did respond to you. You DM me about some sort of
AI neuroscience. Yes.
About some sort of something with seeing how users react to the platform in neuroscience, and then I asked you.
That's correct. That's correct. I'm the guy. I'm the guy who is working on. Yeah.
Okay. Yeah, I'm curious to know what exactly that is. I sent you a DM before for clarification.
Sure. We'll talk about it. Okay, we'll talk about
definitely.
it. Now, just getting back to the main track in terms of the tokenomics. So, Core, see, there seems to be, at one point in time, the reward ratio to the node. If you cap it at 50,000 nodes, the challenge will be your rewards ratio or the reward pool will dry out. Okay. if you look at the linearity of the nodes creation, okay, assuming saying that at the beginning, you will have the maximum number of nodes being created, okay, and then eventually over the period of time, the number of nodes that get created will actually deteriorate because the value of the token is going higher and higher, and the number of users who can afford to create those nodes goes lower.
So
But
that's why
the reward to
we have the community node pool, so that if buying an entire node is out of reach for some people because the price has gone up so much, they're still able to receive some of the benefits of the platform, specifically being rewarded in lava, albeit at a lower rate than what node holders would receive.
Sure. Still core. I believe when I did my statistical analysis, okay, it says that at one point in time, your token value might go higher, but the reward ratio that you'll start distributing to people will dry out. Okay, that number of days is probably around 400 days. From the day you start, at the 400th day, you will have no pool in rewards to distribute it to your users. I can give you that report. Let me share that report with you. See, I might be wrong. I have not taken all
Yeah, I'd like to see what your
factors
analysis is, because if I had some context and I was actually able to look at it, then I'd have a sense of what you're of what you're describing right now. So if you want
Sure.
to and include your analysis in the suggestions channel or the general channel, I'd be more than happy to take a look at it and discuss with you.
Yeah, I'll take care of that.
And Jive,
Definitely. Thank you.
I DM'd you too. Can you send me that report also? I'd love to take a look at it just to understand what you're talking about. I always trying to learn more, my friend, and you sound like you know what you're talking about. So
Sure.
please send it my
So guys, just to set the ground, I run machine learning AI analysis on large data sets. Okay, and one of the key specialization focus areas, what I do is I try to do statistical analysis for a future date. Right, I used to do that for stocks. I used to do that for production supply, procurement supply chain, and indexes. And now, I'm having some free time, and I'm doing it for these kind of node models. Thank you.
Thank you. Yeah, well, that sounds interesting. I'd love to see a detailed scenario or an analysis of what you're describing. So just go ahead and include that, and then we'll continue our dialogue over there on our server.
Thank you, Jive. I appreciate you, my friend. Snappy, you got a question for Core here?
Yeah, so you mentioned tiers of nodes. How would that work?
For tiers of nodes, the way it'll work will be similar to Comb Financial, where to create a node, you'll create a node with different amounts of the actual token, and depending on the amount, depending on the size of the node, based on the number of tokens to create the node, the reward weight will be proportionally higher.
Have you decided what the amounts will be, or
I
like,
haven't decided yet, but I'm looking. I don't plan on just doing random amounts, so I'm looking into what the possibilities are, and I'm trying to approach it in like in a more rigorous way, just to see what would be best for the platform overall, and what would make sense and be sustainable.
All right, thank you.
Yep.
Thanks, Snappy. I appreciate you. We're still waiting maybe on a couple people to raise their hand if they're going to. Or is there anything that you haven't?
Hello?
Can you not hear me?
You got cut off there for a moment.
Oh, sorry, man. Sorry about that. Is there anything while I'm waiting, if there's another question or two while I'm waiting for someone to raise their hand, is there anything that you have not gone over that we project?
I think we addressed most aspects of the project so far. Is there something that you wanted to discuss again? I know one thing that I was looking into before is is having native lending on the platform, but this is something, you know, far into the future, where basically you'd be able to use your nodes or your NLava as collateral to actually borrow on the platform itself. But I haven't really, that idea isn't fully fleshed out yet, and it's something more planned for the future. But yeah.
Core, do you have plans to hire, a marketer and things like that? I mean, what's the plans behind getting someone to front person out there, working with projects, trying to build up, collaborations, things like that? Do you have someone like that, or are you looking just on?
Yeah, I'm definitely I'm always, open to partnerships and marketing opportunities that are out there. At the moment, right now, we've made a couple of YouTube videos with some members on our platform who have, a decent following. Just going over some of the specifics of the platform, what it is, what our goals are. I don't have a dedicated manager, I guess, or a dedicated person to actually manage all these relationships. Right now, it's pretty much me reaching out or hearing from people on an individual basis. But I'm always, like I said, I'm always open to any ideas and opportunities that may be out there.
Awesome, brother.
Did you have something in mind specifically?
Oh, I mean, I always got connections. I didn't know.
Sorry, you got cut off again.
Damn, my internet is bad today, huh? We can talk about this offline. I have some questions to some people that might help, but
Absolutely.
we don't have any more questions from the audience, Core. So is there anything that you'd like to say in closing?
I'd like to thank all you guys for coming here. I appreciate you guys taking the time out of your day to join us and to listen. And I appreciate everyone who came up and asked questions. I'd like to thank Sensei and Scott for hosting us on their server. It was a pleasure being here. Hopefully we can continue to do more AMAs in the future. I know on our server we'll be doing video AMAs going forward, just to give all new community members the opportunity to ask questions. But I love being able to collaborate with other servers and get feedback from different groups and not just people in
Great, man.
in
Yeah.
server.
Absolutely. Appreciate you, Scott. Did you have anything in closing?
No, I just wanted to thank you for taking the time and coming in here and talking to us and kind of explaining what you guys have going on, and looking forward to seeing what happens with your guys' project.
Appreciate that.
Awesome. Just in closing, guys, this was a Cryptonaires AMA for Lava Financial. None of stuff talked about today is financial advice, just information gathering purposes only. We appreciate you spending the time with us, and we hope to see you back soon. Thank you so much. We appreciate you, Core. Good luck on the project, okay?
Thank you.